Hey guys, Brian Baylon here with the Baylon Group, and I want to talk to you guys about first-time home buyers. And interestingly, the average age of first-time home buyers right now is 32 years old with $29,000 in school debt, which is pretty astronomical in the grand scheme of things, but it's actually fairly normal nowadays in 2018. I come across a lot of first-time home buyers, and they're not really expecting what I tell them and what some of the lenders that they come across tell them. And so this video is here to educate you, to help you prepare if you're in that range of looking for your first home, help you prepare for that process and what to expect so that you can prepare now if you're looking to do that 6 months, 1 year plus down the road. When I come across a first-time home buyer, somebody's looking to buy a home, I ask, do you have a lender you're working with? To which they either do or don't. If they don't, I recommend them, but they're free to choose whatever lender they want to use. And we start the application process. So usually these are done online, submitting your general information about your situation financially, and if there are additional documents that are requested, then they're submitted as well. Usually they ask for 2 years of taxes, W-2s for 1 year if you are a W-2 employee, or 2 years of 1099. They ask for 30 days of pay stubs and 60 days of bank statements. And that's usually an industry standard. They will ask for additional documentation. If there are questions that they have, you may be required to submit a letter of some kind to verify, or if they want clarification on your taxes, they need a signed letter from your tax preparer. And when they asking for additional documents, they're usually trying to get your file ready for pre-approval, which in essence is the difference between pre-qual and pre-approval. Pre-qual is you submit your basic information. Underwriting, pre-approval is where they go deep into your situation to make sure that you are a ready, willing, able buyer and financially capable of servicing or paying a loan. Credit score. Credit score is very important as well, and it's a big question that I get from a lot of potential home buyers. A lot of them are usually between the high 500s to mid 600s, which is for some programs like FHA. There's programs, I think it's actually just 580 credit score minimum. There are conventional loans that do 620, 640. Of course, each lender has different programs. I have heard, and maybe a lender can verify this for me, but the average credit score that is approved for a loan is around 730, actually, as of 2017, I think. So much does it cost to actually buy a home? So say, for instance, you're getting a $200,000 home and you're putting 3.5% down. That's $7,000. That's the first thing. First thing is that you need to have cash down in order to pay for a down payment. There are down payment assistance programs out there, but they hike the interest rate, and there's a minimum of a certain amount of time, usually in years, that you have to own the property and potentially live in the property in order to get that full amount of the down payment assistance. But you're trading off a higher monthly payment, but you put zero down, potentially up to zero down, or less than 3.5%. Be cognizant of that, because I think most people don't, at least first-time home buyers, don't just have $7,000, $8,000, $9,000, $10,000 in the bank. Maybe you do, but those are savings toward, emergency fund, or maybe you were planning on getting a new car, something. So it's a pretty significant chunk out of somebody's financial portfolio to put 3.5% down on a home that's $200,000. Now, I use the term or the number $200,000 because the average first-time home buyer is buying a home around $192,000. So it's about, right around there. However, in the greater Phoenix market, homes under $200,000 are disappearing. There's 27% less listings in January 2017, 27% less listings under $200,000 than January 2018. Sub $200,000 home category is a disappearing market. And if you also consider how much, let's say for instance, you do put that $7,000, $200,000 home, $7,000 down, $193,000 loan, let's say for instance, $193,000 loan could end up being close to about $1,500 to $1,600 a month, including taxes and insurance. So, you're looking at going from, you think about it, an apartment going from maybe, for a 2-bedroom, maybe paying $1,100, $1,200 on the higher end for a 2-bedroom apartment in a decent decent neighborhood, but now going to $1,500, $1,600 a month, and that's not including utilities. In the apartment, you could probably get away with $1,100 a month with utilities. So that's a massive jump in monthly payments, and usually comes as a shock to first-time home buyers. So down payment, 3.5% of your purchase price. You've got a $1,600 mortgage payment, or really it's a loan payment, and this real estate technicalities, loan is the proper term, but yeah, $1,600 loan payment, and utilities. If you want cable, I mean, it just adds up. You could be paying $2,000 a month for a house. And that's just kind of what the market is, and that's first-time home buyer. That's entry-level home. $193,000 loan is going to go for that much. So if you're looking at 250s, 300s, you can only imagine how much more the monthly loan amount would be. So hopefully you guys are leaving here with a little bit of a plan. If you're a first-time home buyer, feel free to reach out to me. I can guide you in more detail and connect you to somebody else, another lender, or if you have your own, you can feel free to connect with them as well. But yeah, we can help you to find a home.